Good morning, investors. My name is Louis from the CoSec research team. Today's Friday, the 1st of April, and here is your pre-market wrap. Yesterday, the Australian stock market ended just 0.18% lower at 7,498. While on Wall Street, all three major indexes ended in the red, closing the March quarter with their worst performance since the onset of the COVID-19 pandemic in 2020. According to chief market economist at Spartan Capital Securities in New York, Peter Cardillo, investors are now expecting a positive earnings season, so the market is ignoring the recession and the yield curve. Earnings, of course, will be the biggest driver for markets in April. Despite this, JP Morgan expects the S&P 500 to limp through the second quarter of this year, while expecting strong gains in the second half. And in Europe, retail stocks fell around 5% in their worst day in more than 2 years. In particular, H&M fell more than 12.9%. The company have commented how they'll be raising prices in order to accommodate for high raw material and transportation costs. The wider European market ended 6.5% lower in also their worst quarter. Meanwhile, in Asia, Chinese stocks ended lower yesterday after both factory and services data pushed into the negative. That exacerbated concerns over recent COVID-19 lockdowns in China. Investors are still waiting to pile into Chinese markets with near-term risks ever present. And to commodities, the price of oil saw a sharp correction as the White House confirmed they'll be releasing more than 180 million barrels of oil from strategic reserves over the next 6 months. Despite this, crude is still holding onto $100 per barrel. And in cryptocurrency markets, they are trading lower with Bitcoin now at 45,700 and Ethereum at $3,300 respectively. Finally, for this morning, our SPY futures are trading lower by 0.56% at 7,437. This market wrap has been brought to you by CoSec, Kadari Securities.